Welcome to Black Eagle Speaks. This is your Hema Chandra, called Hema. We've been discussing about the various concepts involved in insurance industry, to be in particular in the general insurance, or you call it as a non-life insurance industry. We have with us one of the most experienced person, Mr. Ananth Ramakrishnan, Principal Officer and CEO of Insight Insurance Brokers Private Limited. Mr. Ananth comes with around 20 years plus experience in insurance industry, apart from about 8 years experience in various other industries. So today our topic for discussion is going to be motor insurance. Now we've been discussing with a lot of people on why do they take motor insurance, because today a two-wheeler or a four-wheeler is part of our family, and when we actually speak to the customers or any individual why one takes a motor vehicle insurance, surprisingly the answer is being really alarming. They say it's only because of the law of land. Now, other than the law of land, there are a lot of other things which is beneficiary of taking a motor insurance. Now, let's get into the discussion. We have Mr. Ananth Ramakrishnan, who will throw more light on why a person should take motor insurance and what are things he should look at while taking a motor insurance. Welcome, Mr. Ananth. And I'll ask you straight, what is motor insurance and what all does it cover?
A motor insurance is an insurance which you take for your motor vehicles, like maybe private cars, like two-wheelers or commercial vehicles or miscellaneous class of vehicles. Essentially, a motor insurance includes all types of vehicles, as we mentioned, as we discussed, and provides financial protection in the event there is a damage or a loss resulting out of a damage due to an accident or a theft or a loss of the car itself. So, essentially, motor insurance covers all these things,
including natural calamities.
Yes, it covers flood, inundation, all these things also. And essentially, it has two parts of coverage. Like one is an own damage part of it, and the other one is a third-party losses. Both are covered.
Okay. What do you mean by own damage or third-party coverage?
See, own damage is something like which happens to the vehicle itself, or to put it in much simpler terms, any loss happens to the vehicle is called as own damage loss, or any loss or any damage happens because of the vehicle is called as a third-party loss. Maybe a third-party personal or a third-party property.
Okay. Now you have a motor vehicle insurance which has both.
Yes.
Okay.
So motor vehicle insurance has two sections. One is a own damage section, the other one is a liability section. Liability section talks about the third-party coverages,
Okay.
including the PA to owner drivers, like including the coverage for the occupants of the car, like driver plus the occupants.
Okay.
So everything is covered.
So when you mean PA, it is personal accident insurance. So when a person takes a motor insurance, as a policy, it comes with both own damage as well as third party. Until otherwise, he specifically asks for either own damage or a third party. How does it work?
See, basically, the policy has two sections, like the own damage and the liability section as well. But as you mentioned during your introductory speech, like the mandatory portion is only the liability part. The third party premium is mandatory. The law of land mandates somebody to at least take a third party insurance, so that any damage because of your vehicle to any third party is being compensated.
Okay.
So that's the purpose. So as an insured, you have a choice. Just to comply the law, you can only go for a third party or a liability insurance, liability only policy. Or if you are interested in terms of managing your own financial this thing like protection
Damage
in case of any loss to your bill or receipt. So it's always better to go for a comprehensive one which covers both the own damage as well as the third party part.
So you suggest like when a customer looks in for a motor vehicle insurance, you should look at it as a comprehensive. That because if there is a damage to the own vehicle, so that is also covered. Plus if there is any other damage for any other property because of this, it is also covered.
Yes.
Okay. Now, when you say this damage, when you're talking about that, Now, generally, what things goes in a customer's mind is how much of loss is settled in case of a accident or in case of a damage, which could be because of an accident or natural calamity. Because some time back in Chennai, when there was a big flood, there were lots of vehicles got damaged in the flood. So, how much of loss a person can look at from claims?
See, basically when we talk about the settlement of a claim or the compensation what you might receive in case of a loss or damage to your vehicle. See, one thing is like we've been talking about sum insured
Yep.
in our previous
Correct,
discussions and other things. Sum insured is something the maximum value for which you can expect the loss to be compensated. Whereas a motor vehicle, like it has to be understood that it is a depreciating asset. Okay, so the moment that the vehicle is delivered out of the showroom, the vehicle depreciates by around 5%.
Mm-hmm.
Okay, so you can't expect the entire value of loss to be settled in case of a total loss. So there is something called as an IDV, so which we call it as insured declared value as against the sum insured. Normally the other products have something called as a sum insured, whereas the motor insurance is operated on an IDV,
Okay.
which is an insured declared value.
Okay.
Okay. So when we talk about the claims again are into two parts. Like one is a own damage claim, the other one is a third party claims. The process of both these are completely different. So the own damage is to the prerogative of the insurance company. They appoint the surveyor, they assess the loss, and they pay the claim. Whereas in terms of the third party loss, it has been paid through a forum called MACT, which is Motor Accident Claims Tribunal. We'll talk about it a little later while we talk about the claims process and other things. So when you talk about the own damage claims, there are certain things which are not covered in the policy as a standard policy. We will also talk about the add-on covers which are currently available in the modern day insurance programs. But a standard policy comes with few exclusions, as we were talking about health insurance also. Motor also has some non-payable parts of it. Like the first thing is the depreciation part. Whatever be the depreciation will be applied to the claims also. There is something called as consumables, like your transmission oil, your nuts, bolts, and other things like small parts which are integral part of a machine are not covered out there. Tire damages are not covered unless it is a resultant of a damage.
Oh, okay.
Normal wear and tear
Hmm.
issues are not covered. So these are few things.
Plastic parts.
Plastics are covered with the depreciated value.
Depreciated value.
So the moment it comes out of the showroom, the plastic parts are depreciated beyond 50%.
50. Okay.
Okay. So hence we talk about the claim process or own damage part of it. All these things are things which you have to have in mind. We will talk about, or I will explain you how the add-on covers and other things operate right now itself. So add-on covers are nothing but like which gives you enhanced protection from it. Or to put it in a much simpler way, like these are all options where you can uncover the uncovered portions.
Mm-hmm.
Okay, like in a normal standard policy, depreciation is applied. When we talk about a claim, like there is a surveyor who makes an assessment of the loss, and post this assessment of loss, there is something called as a depreciation which is deducted from that, and you call something as a salvage, like all the unaffected parts are be borne by the client. It has some material value. They roughly apply say 3 to 5% normal practice. And there is something called as an excess part. Excess is what we talked about, the risk retention in the previous episode. So these are the three things which are adjusted, and the net value after adjusting all these things are paid as a claim. So now we talk about the uncovered position or portions of the policy, like the depreciation is deducted. Do we have an option? Yes. There is a nil depreciation add-on cover which is very common now.
Mm-hmm.
So, which if opted, the depreciation will not be applied while the claim is being processed.
Okay.
There is a consumable cover. So, if you offer that add-on cover of consumables, your consumable cost is also paid. Okay, and there is something called the engine protection
So
cover.
what do you mean the consumables?
The transmission oil and all consumable parts which are used in the vehicle.
Understood.
small bolts, nuts, some rubber parts, like even in the windscreen, like in the windshield.
Yeah.
So the shield is protected by the rubber part. So that is again a concern.
Okay.
That is used for fixing it. So all consumers. Everything has a cost, but not covered in the personal insurance policy. Now with the advent of all these add-on covers and other things, you get much higher protection in the event of a claim. The very important cover I would say is an engine protector. So normally engine losses are not paid if there is any water entering into the engine channel. So now that also can be covered. So if you have opted for that.
Good. Now, there is one more question which you were mentioning about IDV. Okay. Now, who decides that IDV? Is it the customer or the company?
So it's a mix of both. Like, see, every company has got their own IDV chart. So basically, the value of the vehicle is known at the launch of it, and you keep depreciating it by saying the moment it goes out of the showroom, it gets depreciated by around 5%, and further it gets depreciated by 10% every year. Okay, so that is an IDV chart. But in case the IDV also, when we talk about IDV, you have few other options which you can add as an add-on cover into the IDV itself, like the value of electrical accessories or non-electrical accessories. You always, I said, no, it's a more emotional asset and it's a
Correct.
social this thing. Every new car buyer would love to spend some money in terms of decorating it, like putting some valuable seat cover, like they may do a lot of value additions to make it look more beautiful, sort of. So those are all additional expenses. By providing it, you can add it to your IDV as non-electrical accessories. Some people may do some electrical accessories also. So all these things like put together becomes a combined IDV of the vehicle. So that is the insured declared value based on which any claim assessment or claim settlement happens.
Okay. Now, we also spoke about something called about depreciation, then about salvage and excess. Okay, just some more light on the salvage and the excess.
See, excess is nothing but your portion of risk which you have to retain. We spoke about the risk retention and the risk transfer in one of our episodes. Earlier.
Yes.
Okay. This is the amount of risk retention you are mandated to hold. So because until unless you have a share of loss, you will not, or rather it's been assumed that the insured will act responsibly because he also has a share of loss.
Share of
So
loss.
that's fine.
Yeah.
It's a common practice of excess.
Yes, yes.
Salvage is something like either the defected part or some parts which are not affected but still have to be replaced. So has some material value in the single market. So normally the dealer can help out or the insurance company themselves can help out finding a salvage buyer.
Okay.
So that cost you can get it back. That is one. Salvage is more prominent in terms of the total loss.
Mm-hmm.
When we talk about losses, like there are two types of losses, either a partial loss
Yeah.
or a total loss. When we talk about partial losses, it's a small claims like there is a scratch, there is a dent, like this, some damage to the bumper alone, like so the value of claims are lower. Okay, so in such cases you don't have an issue, like but still the entire claim process based on the depreciated value until unless you have a nil depreciation cover added to it. So the process goes this way. When there is a total loss of a claim, or we spoke about floods and other things like where the vehicles got submerged,
Correct.
the cost of repair would exceed the value of your insurance.
Insurance.
So in such cases, it is considered as a total loss of the car. The insurance company will arrange for a salvage buyer. There are a lot of second-hand car buyers and other people. They will use the metal parts for scrapping purposes. They sell it for scraps. There are some good working parts. They can use it to sell it at the second-hand market.
Refurbished.
Yes. So there are a lot of ways where even the fully damaged car could get some revenue. So that amount of money is adjusted, that you get it through a salvage buyer, and the total value of compensation will not exceed the idea, or it will not be lower.
Okay. Now, of late, the new thing which is coming is the bumper to bumper insurance. What exactly does it mean by bumper to bumper?
bumper to bumper is a more colloquial term.
Okay.
So all the add-on covers, just to say that your car is protected from the front bumper to the back bumper.
Okay, fully covered.
Yes, yes, it's fully protected. But again, the thing is actually doesn't mean that there are many add-on covers which helps you to get the fullest of the coverage. So when you talk about add-on covers, there are a host of list of add-on covers which are available in the market. The nil depreciation cover, which ensures that your car will not be depreciated during a claim process, or the depreciation also will be paid along with the claims. Second one is the consumable cover, all consumable parts of the vehicle is also covered. Third one is the tire cover, even on a depreciated loss, the tire can be covered, subject to certain terms and conditions. And the fourth one is the engine cover. So even there are add-on covers to protect the loss of keys. Today most of the cars are connected cars. And everything is operated through an internet, and everything it's an IoT facilitated cars. So the key is the most important thing. You have a keyless entry.
Correct.
So the cost of replacement of key ranges anywhere between say 10,000 rupees to almost 2.5 lakhs.
Yes.
For premium cars.
Premium cars, yes.
So for a premium car, if somebody loses their key, they'll have to spend almost another 2.5 lakhs just to get the key replaced.
Correct.
So the loss of key is also a cover. So in short, the B2B or the bumper to bumper is just a colloquial term. But going in depth, it refers to the add-on covers. And when you talk about add-on covers, there are a host of add-on covers which has its own coverage terms. You have to read through it and understand what you are paying.
Okay. Now, we were talking about the claims. Now, tell me, is there anything which cannot be claimed or which can be partly claimed? Is there anything like that?
See, the biggest thing is the partial loss. So, doesn't mean that if at all I have an IDV of say 10 lakhs, even for a small loss, the company will settle me 10 lakhs. It's not the case. The loss is settled only to the extent of the assessed damage. Assessed damage, which is done by the qualified survey. So that is one. Second thing is standard policy. I am talking about add-on covers. The standard policy applies depreciation. That means your claim value will be a little lesser. It doesn't pay for the tires. It doesn't pay for tires if the damage is because of an accident. It's covered.
Just a pure vanilla.
Yes. So not for depreciation, wear and tear losses will not be paid for that. So engine, normally if you have not opted for an engine cover, and unfortunately there is a water entry into the engine channel. So if at all the engine cracks because of that, that loss is not paid. Consumable covers are excluded. So all these things are only partial settlements. And again, as we mentioned, the plastic parts, plastic and fiber parts, attract a depreciation of 50% from day one. The moment the vehicle comes out of the garage, of the showroom, so the depreciation of rate is around say 50%.
Okay.
But all these things can be covered if you opt the right add-on covers, so that the coverage is much wider and also gives you complete 360 coverage.
Okay. Now tell me, because with so many things, because I was thinking till today, I'm just talking as a layman, when I do this interview. Now, generally, when a customer takes a two-wheeler or a four-wheeler or a commercial insurance, they just get into even you find a lot of petrol pumps. You have two-wheeler license, two-wheeler insurance can be taken in about 5 minutes, 10 minutes, or half an hour. So they just go take it up without knowing what are things available. The purpose of Black Eagle Speaks is to educate customers on various things which is available in the market, where he is unknowingly leaving it without, because he doesn't know about it. So that's the purpose of me doing it. Now, tell me, what are the types of motor insurance available in the market?
See, even though the motor insurance works in the same principle, the old damage and the third party losses are covered across all segments of motor policies which are available. There are broadly 5 different classes of motor vehicles. So, the classes of vehicles are differentiated based on the usage of the vehicles or on the terms of usage.
Okay.
So one is a private car, the other one is a two-wheeler. These are more common things you will be knowing. The third one is passenger carrying commercial vehicles like your cabs,
Buses.
taxi cabs, buses. So all these things are categorized under passenger carrying commercial vehicles. And the fourth one is a goods carrying commercial vehicles,
Mhm.
like your minivans, your
Lorries.
stock carrying vans, lorries, and all these things are goods carrying commercial vehicles. And the other class is the miscellaneous class of vehicles, something which are used for construction equipment like road rollers, road pavers.
Oh, okay.
So all these things are cranes, registered cranes. So the basic criteria of a motor policy to cover is it has to be registered.
Understood.
Okay, so even cranes are covered, mobile cranes which are registered in an RTO. So this is a basic thing. And everything has its own premium identification the thing. See, the premium computation depends on, for a private car, is on the IDV value what you want to choose. The make and model of the vehicle, because through which you identify the CC, the carrying capacity of the vehicle, or the cubic capacity, sorry, not the carrying capacity, it's the cubic capacity of the vehicle. And then the RTO. RTO will help you identify like in which part of the country is the vehicle playing. Okay, and more importantly, the NCV status of the owner.
Yeah. See, the thing is, we were talking about depreciation and consumables and everything. Is there any other way where I can cover this also, depreciation or even consumables, uncovered portions?
We discussed that, like the add-on covers help you to cover all this.
So you
So
have,
by opting for a nil depreciation cover, you can avoid the depreciation of the claim.
okay.
So by opting for a consumable cover, you can have your consumable parts replaced and can be compensated.
So to be even more precise, just make a vanilla policy. A person, if in case he wants to cover depreciation or uncovered policies or consumables, you should take up an add-on. So viewers, keep a note of that. Okay. Now let's get into claims part of it. How a claim is processed in a motor policy?
See, the claims when we talk about, there are two types of claims, as I spoke to you about. Like one is the own damage part of the claim, and the other one is the third party losses. So we'll first discuss about the own damage part of it. The moment there is an accident, okay, the responsibility of the insured is to immediately intimate the insurance company and register the claim. So there need not be any time delay, because the more the time you delay, there is less the opportunity that you could salvage or minimize the loss. So
Okay.
that's the purpose. Like it has to be immediately intimated. Once you intimate the claim, you can take it to the nearest garage. So even though there are companies who are not mandating this, so most of the companies are not mandating an FIR until unless there is a third party
Damage.
relation to an accident, like any loss to a third party life or to a property. Otherwise, it is not mandated. But as a matter of good practice, if you can take an FIR or a CSR from the nearest police station, it helps the insurance company to process the claim much faster. So the ambiguity part of it has been ruled out. So it's a proven case that it's an accident, it's a genuine case. So second thing is like once you leave the vehicle to the garage, the insurance company appoints a surveyor who goes to the garage, inspects the vehicle and assesses the loss. And based on his assessment, he prepares an assessment of the claim amount to be paid.
Okay.
And based on the policy conditions, like if at all it has to be applied for depreciation, consumable and all things, like what will be the admissible part of the assessment he will propose to the insurer. Once the insurance company gets the final assessment from the surveyor, like they'll work out of the salvage part of it and deduct the excess and pay you the claims. So it's always better to identify like there is a garage which falls in the network of that insurance company against which you are covered, so that the process makes much simpler. The delivery of the vehicle and the entire claim process can be much smoother than it is.
Okay.
Even though you have an option to spend it and get it reimbursed from the insurance company. Claim is anyway paid. When we talk about the third party losses, the third party losses are not settled by the insurance company. It's being awarded by the forum called MACT, which Just Motor Accident Claims Tribunal.
Motor
Accident Claims Tribunal.
just like the ombudsman, you have this.
So this has the powers of a High Court.
Oh,
So
okay.
this is exclusive body which takes up all the cases of road accidents and motor accidents.
MACT.
MACT.
Okay.
Okay. So based on your laws and case and this thing, like MACT awards the compensation to the deceased, which the insured is expected to pay back, which the insurance company takes over. And the compensation has certain rules and things. There is no upper limit on that. But for a third party property damage, there is an upper limit of 7 lakhs.
Okay. Now, when I say a premium of a motor vehicle, now what are the factors which impact the premium of a motor vehicle, or what is that the insurance companies consider or into account to calculate the premium of a vehicle?
See, even though we are in a de-tariff regime now, so starting 2007, the tariff ratings have gone. But still, most of the companies follow the erstwhile tariff ratings, and based on that, on their own experience, they apply the discounts according based on their experience to that make and model of the vehicle. So, erstwhile tariff ratings are the basis of calculation still. But the tariff ratings are fixed based on certain criteria, like the cubic capacity of the vehicle.
Mhm.
So we have 3 classes of vehicles. Like one is the private car, the other one is the personal carrying vehicles, and the other one is the commercial vehicles, goods carrying commercial vehicles. So for the private cars, and the two wheelers, the IDV rate or the tariff rate for any this thing like is fixed based on the cubic capacity of that particular vehicle. So this is point number 1, which will have an impact. But similarly, in the case of passenger carrying vehicle, it also depends on the seating capacity. It has both the cubic capacity and also the seating capacity. And for the commercial vehicles, like it depends on the carrying capacity or the gross vehicular weight of the vehicle. GVW, we call it as GVW. Second one is the RDO location. So based on the RDOs, the tariff has bifurcated into different zones. Zone A, Zone B in terms of private car. Like in commercial vehicles, you have Zone C also.
Okay.
And the age of the vehicle also plays a very important role. Older the vehicle, higher the premium. So similar to your health insurance also. Higher the age, more the premium will be. The lesser age will attract the lesser premium. And fourth one, we talk about the NCB, the no claim bonus. And NCB is something is very important. A lot of people need to know about it. Is that like NCB is provided as a incentive for a good driving experience, if you ask. And basically, because a good driver is expected to commit lesser losses to the insurance company. Okay. And when we talk about good driving, this thing, obviously it is also meant that NCB is not given to the vehicle, but it is given for the owner, or it's given for the driver. Okay. So if the vehicle is in my name and I am a very decent driver, I don't have much of loss experience. Say in the last 5 years, I have not made any losses. So I will have the benefit of getting more or increasing in NCB year on year.
Okay.
See, for example, the NCB starts at 0% when I buy a new car. 1 year of no claim experience, like I will get 20%. 2 no claim years, on renewal you get 25%.
Okay.
Third year it's 35%, 45%, and you can reach up to 50%. That's capped. The biggest advantage of being a very responsible driver continuously and sustained this thing is whenever you change a new car, most of the people do not know or do not care about it, but it can have a good impact on the premium. Like most of the people do not transfer their NCB to a new car.
Okay.
See, and there might be cases like I might sell my vehicle now, but I might not immediately go for a new car.
It might take some time.
Buy it after 6 months.
Mm-hmm.
In that case, like you can take a NCB reserving letter from your expiring insurance. Keep it and then you will swear it for a period of 2 years.
2 years.
Yes.
That's
So whenever you take a new car, that NCB can be transferred to your new vehicle. So instead of again starting from zero, if you already have 50% NCB on the previous car, you can transfer it to your new car. There the premium benefit will be much higher.
Oh, great. So it was, I mean, all these things were real news to us. And so finally, before we end up the session, now what are things a client should have in his mind while taking up a motor vehicle insurance?
See, one thing is like we spoke about in the previous discussion also. Fixing or identifying the amount of coverage you require is very important. See, a lot of people do one common mistake, like say by just reducing the insured declared value, you think that you'll be paying little less. But it's always better to fix the fair amount of IDV because you never know. In case of a total loss, the compensation would be much lesser if you insure the vehicle for less than that. That's one. Second one is like as I mentioned, drive sensibly at all point of time so that you try to focus on increasing your HC status. That saves a lot of premium.
Okay.
Third one is buy add-on covers, whichever is required for you, so that see add-on covers are devised for the purpose of giving an enhanced cover. It's in the best interest of the insured to have the vehicle protected across all parameters. Complete 360-degree coverage can be opted by opting for an add-on covers. And add-on covers are given only for a specific period of time. So up to 5 years, and some companies offer up to 7 years. So till the time it's been available. So it gives a complete coverage to the asset which you emotionally own. So that's a very big thing. And always choose the right insurance company. Just because like all companies are accredited by IRDAI, but no, with all due respect for their experience and their services till this point of time. But there are certain companies which have got very good strength in terms of certain makes and models.
Correct.
So always look at the widest network coverages so that you have the advantage of the cashless types wherever you go. See, particularly in motor insurance, you never know where the loss will encounter. Doesn't need to happen in the same city because motor vehicle is meant to be traveling to different places. What if there is an accident in some remote location?
Correct.
Always look for an insurer who has got a very widest coverage of network garages so that the experience or the claim servicing experience can be better.
So it was a great session, Anant, and there were a lot of new things which, in fact, I myself was enlightened because with this one thing which I have very clearly understood is I should not reduce my IDV, insured declared value, just because for reduction of premium I should not take it because it probably helps at that point of time, but it really helps when there is a claim. This IDV really plays a major role.
Very true.
Okay, so thank you very much for the insights, and viewers, now you know what you should ask for and what all you should focus while taking up motor vehicle insurance. It's just not for the land of law, it's for your safety. Thank you so much for watching Black Eagle Speaks. Please subscribe, like it and share it. Thank you. Jai Hind.